So let's get today's Frontier opening bell going with my panelist, Ali Kransachi, who is the CEO at Rich Frontiers Management. Good morning, Ali.
Morning, Boston. Good to see you.
Ayodeji Eboro is the CEO at Afrinvest Securities. Ayodeji, good morning. It's good to have you. As always, Ayodeji, if you just unmute yourself, I'm sure we'll be able to hear you clearly.
Yeah, good morning, and thank God it's Friday.
Thank you. Yes, it's a TGIF. And then Ijoma, thank you very much from Onyeka from Vertiva Capital Management. It's good to see you as well.
Yeah, it's good to see you, Boston. It's a pleasure to be here.
It's a Friday. Let's look at Thursday's closing numbers from the 5 major markets, equity markets on the continent that we track on a daily basis. The Nigerian stock market kept in the green territory yesterday. Very small patch, but again, it's been like that since Tuesday, 0.13%. Ivory Coast BRVM by the same margin. Egyptian market, 0.75%. Of course, the Egyptians are on holiday, so that's the Wednesday figure there. Then Kenyan market, 0.5%. The South African lost a whopping 1.42%. That was the biggest slump among the major equity markets on the continent. For Thursday, where are we with the East African market? Quite a couple of headline news from the East Coast when you look at Kenya as the big story. But again, Rwanda set up a financial intelligence unit, something close to Nigeria's FIU, which is now a standalone agency, all against money laundering, anti-corruption, and making sure they're in line with global best standards. Turnover yesterday on the Nairobi Securities Exchange down 47%, and the TB auction by the central bank was 9.6 billion shillings. Now look at the Bank of Africa. A very unpleasant story there for the former CEO of Nakumatt. About 2 billion shillings of his personal assets being auctioned off by next week because of the loans that are related to the collapse. Nakumatt, that's the supermarket chain in East Africa. Meantime, good news from Kenya, where the labor union says they've dropped the case against the government and will now pave the way for the authorities to lease 5 of the government's sugar milling companies. Uganda coffee exports, that's one great news from East Africa. 4.87 million tea bags, $471 million in inflows between April last year and March 2020. Ali, should we start with the tea and coffee, or you rather start with Nakumatt, the billionaire investor who's now seeing billions being scraped off his personal assets?
So let me start with Nakumatt. Nakumatt was an iconic supermarket chain here in Kenya and in East Africa, Barson. They had about 47 branches at the peak. They were going to list themselves at the Nairobi Stock Exchange for about $600 million market cap. And essentially it all fell apart. Currently, I think there are no Nakumatts left at all. You've had the arrival of Carrefour, which has become the dominant party in this marketplace. And this is Mr. Shah. He is the iconic leader of Nakumatt. He pledged personal assets to Bank of America. Those assets were liquidated. It's really an extraordinary tale, I'm afraid, of the rise and fall of an African entrepreneur. Grew too fast, borrowed too heavily, borrowed on overdraft, and then the business could not sustain and essentially crashed from that $600 million valuation all the way down to zero. Uganda coffee, this has been a great story. Production is up. They've earned shy of $600 million when I saw it last. And this has been one of the big underpinnings of the Ugandan economy in particular. Rwanda Financial Intelligence Unit, you know, they are they run a tight regulatory ship over there. They've got all the pieces in place to build out a really meaningful capital markets. And I think that's that story. NSE turned higher yesterday a little bit, but really the story this week has been all about the bond market participation, where we had this huge oversubscription, 149 or so percent in the 11-year bond that the government of Kenya issued.
Interesting. Nakumatt, I had the opportunity of shopping in Kigali at Nakumatt a couple of years ago, and this was an iconic brand, as you put it. But suddenly, it's so sad to hear that it's totally collapsed, and the CEO is going to have about 2 billion of his personal belongings or assets. He's going to go grounded as well. That's not a good story about entrepreneurship on the African continent, by the way. But again, that's how businesses go sometimes. Let's talk about the Nigerian market and West Africa. Oil story is the big one for Nigeria. The country's oil prices at current levels, a comeback in June, July, has helped Nigeria get an oil surplus of $72.4 million US, according to Reuters. As at Wednesday this week, revenue, according to Reuters as well, $676.41 billion at the end of the month of July. That's good news. On the flip side of that was that in line with the OPEC Plus decisions, Nigeria would have to shave off 114,000 barrels per day this month and next month. What that means for the country's oil earnings is an easy guess. Yesterday, the SEC in Nigeria conducted its first CMC meeting. That's the Capital Markets Committee meeting for the first time virtually. A briefing at about 9:30 Nigerian time today. We're on the lookout for that as we speak. Meantime, Airtel and Standard Chartered are teaming up for digital financial inclusion across the continent. Ayodeji, let's come in here first on the oil story, oil prices and our revenue tied to oil prices and the production cutback that we'll have to comply now, being among the 4 or 5 laggards within the OPEC Plus.
Yes, we know how challenging it's been for Nigeria regarding revenue meeting up with its revenue targets. We can see for the past 5 or 6 months, based on the statistics from the budget office, that its achievement has been less than 50%. And with what has helped now with the surplus that we're seeing, it's the oil prices that have stayed above $40 per barrel. We feel it's a positive one, and also with the devaluation from the conversion exchange rates, so in Naira terms, that has also increased. Currently, if we recall, about 3 or 4 months ago, 306 was the exchange rate that was being used to convert, and now from 360 now to 380 based on what we have on CBN website. So that is also would reduce that gap because we know a lot of states rely more on FAC allocation for there to be activity. You get the FAC allocation, based on that they pay salaries. If they don't pay salary in some states, there's really no business activity that you would see. So yet on the positive side is something to cheer about, but we all know we don't have control over this. If any major shock to oil price again, we come back to the same story of how do we meet up. And with the OPEC cuts, that would also reduce. So it's when you look at revenue, it's price quantity. So they're trying to keep price up. They're trying to reduce quantity so that at the end of the day, your total revenue. So we feel that it's also positive. What we just need to do is intensify efforts to diversify our FX earnings, which I think it's possible because we have we just need to start adding value to most of the raw materials and our natural resources before we export them.
Great. Thank you, Ayodeji. Ejima, in terms of oil markets, I'm sure, but again, look at the equities market so far this week. What's your take on that side?
I mean, if I recall correctly, the equity market has been has gone up and down, has gone down and back up this week. It started off in a negative position, and for the past 2 days has actually traded up. Um, it's nothing much has changed in that regard. I don't think the oil price movement and this story has has largely had any major effect on the market. Um, it, people are still being cautious, wondering whether there'll be a second wave of the COVID-19 pandemic, and whether that's going to how that's going to impact the market. Market fundamentals are still largely driving the market, and there's a lot of seesaw trading. On the oil story, how it will impact the market. We expect that the extra cuts will impact the E&P producers such as Seplat in the market, in the Nigerian market. But as Ali said, but as Ayodeji said, with the moving exchange rate, we should see them earn more naira for their dollar. So there's that positive, on the other hand. For Nigeria with our revenues, I recall that it was not just it wasn't just oil revenue that went up. Sales tax, according to the report, sales tax also went up. I think that this is likely due to the reopening of the economy, as more transactions are occurring. We are seeing VAT VAT receipts increase, and this is it's significantly positive, because it's not revenue that goes just to the federal government. It goes largely to the state and the local government, around 85% of it. And these are the people that are usually are most hit by this pandemic, because a lot of them are not self-sufficient, like they just said, and they rely largely on this kind of revenue.
Thank you, Ijoma Onyeka at Vertical Capital. Look at the Southern African market, a raft of economic stories and corporate news from Standard Chartered, from Gold Fields, from Impala Platinum, Impala Platts flagging 300 plus surge in earnings. Says his headline earnings per share will be about $1.17. That'll be a massive 374% north of that when the numbers come out. Meantime, Standard Bank half-year profit was down, says it could pay a dividend if the authorities, if the central bank in South Africa agrees. And again, this morning, Bloomberg reporting that they're sticking with our story, and they're looking at the capital base of the bank, who has the ability to pay the dividend and remain very stable. Meantime, yesterday evening, the South Africa's Ministry of Finance issued a statement saying that the Minister of Finance, Tito Mboweni, met with the bank CEOs as well as the governor of the central bank and his deputy as well, all in a mood, in a way to see how the banking sector will support the second level 2 lockdown easing of Africa's most advanced economy. Then a few rate cut stories from Namibia to 3.75 and Zambia, they cut back to 8% from 9.25%. Gold is shining, by the way. So Gold Fields has its earnings already cut out, for example. But they're looking for a new CEO, by the way. So where do you want to start here? Quite a lot of corporate news.
You've got a lot there. So let me start with the gold sector, the mining sector. We've seen a significant rally in underlying prices, and now we're seeing that underlying price surge feed into bottom line earnings. Goldfield up 200%, Impala up 300%. If you're looking for cash flow companies at this moment in time, in what remains an uncertain world, I think you can look very carefully at these miners, because they're just throwing off cash like there's no tomorrow. So I think we'll continue to see that story support markets. We've had a lot of volatility in the gold price. We got above 2,000, we're back below, but we know the direction of travel remains higher. So I think those are supportive. Tito Mboweni supporting, asking the banks for support. You can see from the results that we're getting the banks are really, really struggling at the moment in South Africa. Standard Bank reported minus 43%. Frankly, that's going to be the best of the lot, in my view. We're going to see significantly worse results, particularly out of the likes of ABSA. And Nedbank was down over 50%. So the question that's going to arise is, what kind of support can they give? You know, where are they going to get that support from in terms of their balance sheet? Namibia cut rates, follows South African rates largely, so that's why you've seen that rate cut. And Zambia, well, that's another interesting story right now, frankly, because you know, you've got a very tight situation in the FX reserves there, and clearly they're trying to thread that needle. It's not going to be that easy.
No, it's not going to be that easy. But again, South Africa has got a lot to do. Again, if the banks can support, it's going to be a very tightrope for President Ramaphosa to work. But now all hands on deck, by the way. Within the Nigeria space, it's been a very interesting week so far, in terms of the fixed income market. We saw the Debt Management Office yesterday. We saw actions also from the central bank. Bring us up to speed.
The auction market that was on Thursday, and we also saw the OMO auction. Sorry, the bond auction on Wednesday. Then we also saw the OMO auction on Thursday. So we've seen of high liquidity, but for the OMO auction yesterday, we saw that the CBN still rates stayed at current levels, and they were able to supply more for the longer. Most investors went for the longer term instrument that was trading around 8.9% for OMO. We feel that there's been currently, and liquidity level is also reducing. Maybe we may attribute this to some of also the corporate issuances that we're seeing, and also some of the structured products we're seeing in the market. If you check, even for the PFAs, investment in infrastructure or project type funds have also increased significantly, which is also good for the real economy. Though, when we also look at it from the investor's perspective, the negative real return, it's also impacts negatively on investors. And that has also informed their search for higher yield, willing to also take higher risk compared to just staying with the treasury bills. So within the fixed income space, they generally feel that yields they are beginning to take like a level, take a floor that we feel that we may not see any major reduction in yields compared to this level again. Though next week there's going to be significant maturities next week that may also impact on that. But we feel investors now are now cautious. They are willing to take higher risk. So if rates continue to deplete at the shorter end of the curve, they would also try to see other structured products, commercial papers. Cardinal Stone yesterday announced that their commercial paper was oversubscribed by 50%. So you can see for firms within that rating, investment banks, it will also encourage more other investment banks to begin to look at that initiative that would also be focused on the risk sector, because we also need that, but that can't solve the problem. Government needs to de-risk that risk sector for us to see any major boost within that space.
Oh, interesting. Ijoma, what's your take on the market so far? If you take the equity market out of it, what are you folks learning about the FX situation as we wrap up the week at Vertebra Capital?
Yeah, so the FX situation has not necessarily improved. So far there hasn't been any major updates in that space. They're still seeing FX. They're still seeing FX reserves being stretched. They're still seeing consistent FX outflows. CBN is still the major supplier of FX at the FX window, and the parallel markets, still has a lot more flows than the official window at this point. The only major thing so far is that the World Bank is basically taking a hard stance on Nigeria's loan request. This was supposed to be a major source of FX, liquidity for the country, but at the moment they are not convinced. The reports allege that they are not convinced by Nigeria's current reforms, and they demand more. And I don't think that is unreasonable. I think that they, as well as many foreign investors, have been demanding the same thing from the country for many years, and it is for the good of the country, it is for the good of the citizens, and it is for the good of the foreign investors. And it remains to be seen whether they'll be able to pressure the Nigerian government enough to to push through these reforms. But with high inflation, increasingly high poverty rates, high unemployment rates, it might be tough for the federal government to put in large austerity measures and make these reforms that might make short-term life harder for Nigerians in the short term.
Yes, I know. But again, next on Monday is going to be our second quarter 2020 GDP numbers. So you guys better be ready. It's going to be a whole interesting numbers to come out from the MBS. Is anyone's guess? But I'll take your guess later on. Let's talk about North Africa a little bit. Then we'll take your take. We'll have your take on Monday's GDP number. Greece and Egypt, they are going ahead next week to ratify the new maritime boundary accord. They're trying to push off Turkey, as it were. Then they're trying to set up a maritime boundary within an economic zone where there's a bit of oil and gas. So it looks like Egypt is now fully in bed with the Greece authorities. Meantime, if you're entering Egypt from September the 1st, be ready to step forward with your COVID-19 test results. Morocco is reporting inflation out of the skies, 0.1% decline year on year in July versus 0.7% in June. Food inflation decreased 1.6%, and core CPI was flat. That's according to Reuters. Ali, yeah. I'm sure you love this Greece maritime boundary story with Egypt.
There's so many threads in this story, so let me try and give you some of them. So what is interesting is the alignment between Greece and Egypt. And this is because Greece and Turkey are very much protagonists. So you can see that the Egyptians and the Greeks are aligning. And I would say that alignment really is versus President Erdogan in Turkey, who's going to announce a big discovery apparently in the Black Sea sometime today. So I think that's, there are lots of pieces in play here, oil and gas in the frame as well. But what is my takeaway is how Greece and Egypt are very, very aligned in their entire approach to this matter. Egypt about the COVID test. Look, tourism is so important to Egypt, as we know. So obviously they're trying to encourage people to come and saying, if you've had a test, we're going to let you in. We're not going to quarantine you, because if you quarantine anyone, no one's going to turn up. Morocco's CPI, very benign. Food inflation number, very, very low as well. And this, again, we've spoken about this theme before. If you've got good food production, inflation stays tame, you can feed your citizens, and you're in an infinitely better than those who can't.
Interesting. Interesting, the geopolitics between Turkey, Egypt, and Greece. But again, let's see how it all works out. I'm sure Turkey is not going to take this line low as well. It's going to try to align itself within the territory as well. Let's see how that goes. It's all in the interest of politics and regional stronghold in terms of socioeconomic standing. Ayodeji, what's your take on Q2 GDP numbers out on Monday? What's your expectation?
So interesting. I think it's also just going to just affirm the negative or the contraction we're all expecting. So it's not like
1.8% in Q1. What's your take on Q2?
I think it may be down like maybe 3%. It's not because the only sector that we expect to see maybe growth is basically maybe telecoms sector. Even like we expect that even the agri sector may shrink within that space because of supply disruption and the full lockdown that a lot of people were not able to move things around. So it's really just going to affirm what we're expecting, except we may see a reaction in the market if maybe it tends towards maybe like the 5% levels beyond analyst expectation. So it's going to be a major shock beyond that. And I feel that it's being expected, so it's not going to be any major surprise. We don't expect to see any major surprise. Based on, you'll see even the PMI data, which PMI is the leading indicator that shows how the economy has been. Yeah, it's been almost around the same level of that 40-something points for those periods. So we feel that it shouldn't be that significant towards the 5%. So between 3, maybe maximum 3.5%.
Okay, that's going to be very interesting. We'll need to see a wipeout of the 1.8% in Q1, then go below that. Onyeka, what's the take at Vertiva on the Q2?
Yeah, so we're also expecting a contraction. Well, I don't think it's a shock when everybody says they're expecting a contraction. Everyone is expecting some level of contraction in almost all countries across the world. And we're going to particularly hit across certain sectors, the entertainment, the tourism. I mean, there's this term outside versus inside sectors. We have telecommunication sector, which might fare a bit better, ICT, but you have entertainment and tourism, which require you to step outside, and transportation, most largely going to take a hit. And even the oil and gas sector, we had some oversupply issues with a significant drop in demand, and so production slowed down significantly in the quarter. Also, we had the period where prices were trading at negative, where oil was trading at negative prices, and that definitely impacted production. So the agriculture sector, which accounts for over 20% of the economy, was while it will be largely while the production side of it will be largely affected. Because mobility was also restricted, mobility of inputs and access to financing was also impacted in the quarter. We will also see an impact on the output in the quarter. We expect that GDP will contract the most in the quarter across the year, and we also expect a full year contraction.
Okay, we will all tune to that on Monday morning. Thank you so much, everyone. We'll tune to that next week. Let's have a great weekend, everyone. Ali, thank you so much for your time today. We appreciate it as every day from Rich Frontiers Management. Ujema Onyeka from Vertiva Capital, and Ayode Jebo from Afrinvest. Thank you so much. Have a great weekend. Let's see you again together next week.